Look at this photo of Elon Musk. Back in June 2021, a single tweet about his new Shiba Inu puppy accidentally spawned an entire cryptocurrency. 4.5 years later, that joke asset hasn't died. It commands a $270 million market cap. Here is the core dilemma for anyone looking at this space right now. Most of the market writes Floki off as a dead relic of the last cycle, but the on-chain data shows an ecosystem that is actively operating. While 99% of the dog-themed coins from 2021 evaporated, a community known as the Floki Vikings spent the bear market writing code. They built tangible software and decentralized finance infrastructure. They also deployed the token across both the Ethereum and BNB chain networks, securing dual network liquidity. This forces a reality check. Floki is a live test case of whether an asset born from pure internet hype can successfully transition into a functioning software ecosystem. The centerpiece of this pivot is Valhalla. This is a fully functional play-to-earn blockchain game. The adoption metrics back it up. The game has logged over 1 million on-chain transactions, and users have minted 125,000 NFTs. Then there is FlokiFi, the ecosystem's decentralized finance layer. This protocol isn't isolated. It's currently integrated across more than 400 different applications. They have also pushed into physical commerce, rolling out active debit cards in 4 countries. And on the automated trading side, they run a native Telegram bot that executes crypto purchases directly within the messaging app. All of this creates a strict trade-off. Transacting within Valhalla or the Telegram bot drives real network volume, distancing the coin from mere speculation. But it means the asset's underlying value is now entirely dependent on retaining active daily users. To survive, Floki has to generate tangible transaction revenue from these specific apps. It can no longer rely on waiting for another viral tweet. The massive headwind capping Floki's price growth is its supply. There are roughly 9.5 trillion tokens in circulation. To fix inflation, developers built an incinerator next to the 9.5 trillion token supply block. First, 25% of platform fee revenue automatically buys back and burns Floki. Second, 50% of Telegram bot fees are sent straight to the burn wallet. Mechanically, every single transaction across their apps destroys a fraction of the total supply. The trade-off here is straightforward. If you buy into this model, you benefit from continuous supply shrinkage during periods of high network volume. But if user activity on FlokiFi or Valhalla stalls, that burn rate drops to 0 and the deflationary engine stops. The tokenomics rely entirely on a high-stakes mathematical bet. Continuous network usage has to outpace and slowly suffocate that massive initial supply. Despite that underlying utility, the market reality right now is brutally bearish. Floki hit an all-time high of 0.0000346 in June 2024, then collapsed to 0.00027 today. That massive gap is a devastating 92% drawdown. For any meaningful recovery, bulls must reclaim the clear resistance line at the 0.000050 mark. Acquiring the asset at this steep discount provides immense leverage if it can break that resistance level. However, the trade-off is that you are hyper-exposed to Bitcoin sentiment. One bad macro week in the broader crypto market will crash Floki twice as hard. The technical reality is unavoidable. Even with an independent ecosystem, this token is violently tethered to the broader macro market. Let's summarize the case. On the bullish side, Floki has outlasted almost all of its 2021 peers. Really only Doge and SHIB share this kind of staying power. They delivered a working game and implemented real deflationary mechanics. The major catalyst on the horizon is Valhalla's mobile launch, scheduled for late 2026, which has the potential to onboard millions of mainstream players. On the bearish side, you are looking at a 92% price collapse, and its meme coin DNA leaves it highly vulnerable to sudden, irrational shifts in market sentiment. The verdict is that Floki is a grown-up meme coin. It carries extreme volatility risk, but genuine revenue-generating products sit underneath it. If you are a utility-focused investor with a high risk tolerance, you might take a watch and accumulate stance, specifically betting on that 2026 mobile gaming catalyst. If you are a stability seeker who cannot stomach massive Bitcoin-driven price swings, you should avoid this asset entirely. If you decide to execute a trade, Binance and Coinbase offer centralized options, or you can swap it directly on Uniswap for decentralized execution. If you found this helpful, smash that like button, subscribe for daily crypto breakdowns, and share this with someone who needs to see it. Drop your thoughts in the comments. Are you bullish or bearish on this one?